So that is fine, and therefore we'll have a unique registration number which will be granted to show that. See, because you could have a charitable institution which is a company, for instance. Now the PAN number may under 12A or 80G would still be having the benefit, and therefore it is something which therefore they felt that it's something which we need to therefore have
sorry to interrupt.
And secondly, what used to happen is with your activity, the commissioner said, no, I'm supposed to examine the genuineness. Okay.
Gautam bhai,
when you went in for...
Sorry, Gautam bhai, your voice
the
is
internet
breaking,
connection,
sir.
I think, is...
Please.
Yeah.
I'm sorry to interrupt, sir.
Yeah, is it? Yeah, now it's clear? No problem. Please tell me, because sometimes it comes over here that the internet connection is unstable, but sometimes it doesn't. So therefore, please do let me know so I can repeat that part.
Thank you, sir.
When you used to go for Section 12AA registration, what would happen is commissioner would say that I'm supposed to, under Section 12AA, I'm supposed to examine whether the activities carried on by you are genuine or not. And unless you start your activities, how can I examine whether they're genuine or not? And therefore, you please start your activities, and then only I'll give you Section 12AA registration. There, the tribunals and the courts had taken a view that no, you don't. The court, it's only if the activities started that is supposed to examine whether they're genuine. It's not that activities have to be started. So now they're saying that okay, we will give you provisional registration for 3 years, even if you've not started your charitable activities. So that's the second thing which they have mentioned. And the explanatory memorandum brings out, they're saying that the process of registration needs improvement with the advent of technology, and keeping in mind practical issue of difficulty in obtaining registration before actually starting activity. And then they go on to say further, it is felt that the approval or registration or notification for exemption should be for a limited period. Say for a period not exceeding 5 years at a time, which would act as a check to ensure that the conditions of this approval, registration, notification are adhered to for want of continuation of exemption. This will also be a reason for having a non-adversarial registry on a day-to-day basis in general, as in any case, they would be revisiting the concerned authority for new registration before expiry of the period of exemption in 5 years. Now, frankly speaking, I don't know how far that will happen, because the faceless assessment, at least so far as charitable entities are concerned, I think we've been seeing, a lot of problems there, frankly speaking. Even if you have tribunal decision in your favor, if you have, in your own case, etc., still they are going ahead with making additions as in the past, etc. And so therefore, that's something which we'll have to wait and see whether that, the promise really still not. We'll have to wait and see what happens there. So now let's go on to see what the provisions say. So as I said, they've now introduced a new Section 12AB. And all trusts which are currently registered either under Section 12A, that was prior to this 12AA coming, or 12AA, they have to make an application for registration to the Principal Commissioner within 3 months from 1st April 21. Earlier, the requirement was from 1st June 2020, but because of this lockdown, etc., they extended that to 1st April 21. So by that Amendment Act, they brought it to 1st April 21. Within a period of 3 months, that is by 30th June 21, they're supposed to do that. Now, given the pandemic, I don't know whether they will possibly have to extend this date further, because you're supposed to scan some various documents and upload those documents, etc., though the process may be online. So therefore, one will have to wait and see. But meanwhile, I think we should go on the footing that, yes, you've got to do it by 30th June 2021. So therefore, as soon as it is possible, one should try and file the application. That's the way I would look at it. This registration is to be granted for a period of up to 5 years by the Principal Commissioner, and that has to decide within a period of 6 months from the end of the month in which the application is made. So that is the provision there. Provision is documents, make a inquiry or satisfy himself on any ground. So therefore, it seems that it's an automatic registration after verification that you were registered earlier. I think that's to be the position, and that I think is from the form.
Sorry to interrupt, Gautam bhai. Your voice is cracking, sir. Gautam bhai.
Sorry.
Sorry,
Hello.
Gautam bhai, your voice is cracking, sir.
Yeah, I know. Yeah. Sorry.
Okay,
Yeah.
okay.
Again, my
Sorry to
internet
interrupt.
is. Yeah. No, it broke off, and I have to again this thing. So I will share it again. So.
Meanwhile, I make an announcement, friends. We are live on Facebook, and so those who cannot attend through link, they can attend through Facebook and YouTube.
On YouTube, not Facebook, sir.
Okay, I'm sorry, on YouTube. I'm sorry, on YouTube. So afterward, those who have not come through this channel can inform the inform whom Manish that they have joined through YouTube. So you will get CP hours because
Yeah. Can you see the screen now?
Yes, sir. We can see the screen, sir, and we can hear you.
Yeah. Okay. Clear. Okay. So I'm sorry. Really sorry for this thing. This new form 10A is actually you've got to log on.
Sir, still you are not able to hear you. Sorry to interrupt.
Form, which is certain, in fact, certain fields in that form are pre-filled, etc. So we'll look at that when we are discussing that in detail. So that's the. The principal commissioner, has got only two things to do. Look at is so genuineness of activity and compliance of requirements of any other law as a material for the purpose of achievement of its objects. Therefore, there. Hello. Yeah. So he looks at he's supposed to look at the objects, genuineness of activity and compliance requirements of other laws, and this requirement about the compliance of requirements of any other law as a material for the purpose of achievement of its objects. What is required to be material? Is it the law which is required to be material, or the requirements of that law which are required to be material? I think it's the material requirements and not the material law. So, for instance, you may have under the Maharashtra Public Trust Act, filing of a change report. But something like taking approval of the charity commissioner for carrying on certain activity, or like hospital, for instance, they're supposed to reserve 10% of their beds for the needy sections of society, etc. Now, those may be material requirements in that sense, and therefore that's now, unfortunately, this being a recent requirement which had come in under Section 12AA also very recently. I think so far there's no case law on that. So therefore, one will have to wait and see how the law evolves on that, so far as that is concerned. If the commissioner is not satisfied on these aspects, that is on the objects of the trust, the genuineness of its activities and compliance with the material requirements of other laws, he can reject the application. And unfortunately, it's not just reject the application, the registration will be cancelled after affording an opportunity of being heard. Now, if the registration is cancelled after affording an opportunity of being heard, that means that the provisions of Section 115 TD will apply in that case. What is this Section 115 TD? Section 115 TD, as you know, is a section which says that if a charitable organization converts itself into a non-charitable organization, then it has to pay tax at the maximum marginal rate on the fair market value of its assets. So now the fair market value of its assets could be quite high because of the fact that, say for instance, certain organization may have been set up maybe 100 years ago. Say for instance, you have your meeting at St. Xavier's College. Now, St. Xavier's College was set up more than a century ago. So the book value may be nominal, but the market value of the assets, the land and property, buildings, etc., would be quite significant. So if your registration under such an organization is cancelled under Section 12AA, then the market, it having to pay tax on fair market value of the assets means you have to dispose of the assets, get the money and pay tax at 42.74%, which is quite significant. And effectively, you're almost shutting down the trust, in such situations. Now, that is an extremely unfair provision, but that's the way the law is. And, this provision had so far only come up in the case of Tata Trusts, where the tribunal fortunately held in favor of the SSC, saying that no, they're not liable, to tax under 115 TD over there in that case. So that was the fortunate part. But this is a very deadly provision that if tomorrow the application is rejected, the registration is cancelled, then you have to go and appeal to the tribunal, because otherwise 115 TD will apply in such a situation. So that is so far as re-registration is concerned, and we'll look at the forms, etc. When we come a little later. But let's look at the new cases of new registration. So if it's a new charitable trust, now a new charitable trust is supposed to apply for registration under 12AB 1 month prior to the commencement of the previous year, relevant to the assessment year from which registration is sought. Now, this is, I think, something which seems to be maybe a drafting mistake, but they've not rectified it in this budget, unfortunately. Because what does it say? So, for instance, let's say you're a trust which is set up in the month of June 2021. Now, you want exemption for assessment year 2022-23. Now, the language of this seems to suggest that if you want exemption for 22-23, you have to apply for 1 month prior to commencement of the relevant previous year. Now, for 2022-23, the previous year is 2021-22. So 1 month prior to commencement of that would be before February 2021, when you were not even in existence, you should have applied. Now that is impossible to achieve, and frankly speaking, fortunately in the rules, there is one clarification, but that clarification will apply only for this year, that is for assessment year 22-23. What happens going forward, one hopes that the law will be amended, but this is something which seems to be very clearly a drafting problem, the way it has been done. Now, all trusts who had made an application under Section 12AA, which is pending as on 1st April 21, and when no order has been passed as on 31st March 21, they will be deemed to be applications made for new registration under Section 12AB. So pending applications will be automatically converted into application under the new procedure. I don't think you are required to file a fresh form. There is no requirement, because this will be deemed to have been, an application made under the new requirements. So as I said, for a new trust, there seems to be a problem for the financial year which the trust is set up. Whether to get the benefit of exemption is a question mark. But the rule, at least for 22-23, we don't have a problem because of the rule. For a new trust, it will be granted provisional registration under Section 12AB for a period of 3 years from the assessment year from which the registration is sought, and the principal commissioner has to pass such an order within 1 month from the end of the month in which the application is made. So they will get provisional registration for 3 years, not up to 5 years. It will be only for a period of maximum up to 3 years. So here also, for a new trust also, as they said that we'll make life easier, that has happened. They say that we will not call for documents, make inquiry, or the commissioner will not satisfy himself. It seems to be an automatic registration. But now, whether it is an existing trust which has re-registered or a new trust which has been granted now in the case of a new trust, where it has been granted registration and now it is renewing the provisional registration, it has to make an application for regular registration 6 months prior to the expiry of the period of provisional registration. So that is before the expiry of 3 years, 6 months prior to that. So before 2.5 years gets over, you've got to apply, or within 6 months of commencement of activities, whichever is earlier. So if you started your activity, then within 6 months of commencement of activity, you've got to make an application for a regular registration. And that regular registration will be in Form 10AB and not in Form 10A. So what do you mean when you say commencement of activity? Because within 6 months of commencement of activity, you've got to apply. So for a trust, whether it would include activities of fundraising or only activities in attainment of objects, to my mind, I think when you're saying activities of a trust, even fundraising should apply. But I think the way the department looks at it, they would say that no, It has to be an activity in attainment of the objects that it has to be started. And it's only then from that date, that's the way they've been looking at it so far, because you always have certain funds raised, certain donations received today when you go in for your 12A registration. And they still say that, no, you start your activities and then come back. So what they mean here, I think, is activities in attainment of the objects which you have to carry on, and so that's the meaning of that commencement of activities. Then in case of, when will the activity be regarded to have started? When you start hiring the employees or when the actual employees start working? I think it would be actual working by the employees. That's where the point is. If you're an organization which is carrying on the activities through its employees, then it would be when the employees actually start working. In case, suppose the activity involves setting up, say, an institution such as, say, a home for the aged. When the activities are set to be commenced, when you start looking out for the land, when you acquire the land, when you start construction of the building, when you complete the construction of the building, or when the organization, the institution really starts working. I think because what are your objects? Your object would be setting up, running, maintaining the home for the aged. That would be typically your object. So setting up also, I think once you start the activity of setting up, and that would be when you start looking out for land, I think that would be amount to commencement of activities in this situation. And that should be good enough so long as you're able to demonstrate that you have actually started that activity. Whether an act of donation to another trust can amount to commencement of activities, I think yes, because normally that's also in your object that you can carry out these activities either by yourself or by financing other trusts, or you can also support other trusts which are carrying out similar activities. So therefore, that may be amount to a donation or to another trust would amount to a commencement of activities. Now, can a delay in making the application be fatal to renewal of registration? Say, for instance, instead of doing it within 6 months of commencement of activity, you do it 1 year after commencement of activities. Can you say that, no, now I will not grant you, renewal of registration. I'm refusing them. I think, the way the courts have been reading it, that this is merely a procedural requirement. So long as you comply with it, even if it is late, then it should be fine. So therefore, I think, of course, if your provisional registration has expired in the meanwhile, your 3 years is over and you applied after your 3 years is over, then possibly, for the interim period of 6 or 7 months, you may not have the registration. But since the registration for a financial year, it really, so therefore, it should not be such a severe problem, I think. And typically, I said courts and tribunals would read this down to say that, no, just a slight delay, which is a procedural lapse, should not result in a denial of registration, which is a fairly harsh consequence. Now, here the principal commissioner can call for documents, make inquiries to arrive at his satisfaction, and he will again he has to satisfy himself about objects, genuineness of activities, and compliance with the requirements of other laws. And he will grant you registration for a period of 5 years within 6 months from the end of the month in which the application is made. So that's the position. So here he will go into everything, all your this. Whereas in the case of your re-registrations, there I think the requirement there is he will not it's an automatic situation. It's only for renewal. So when you have for renewal, when you apply for that 6 months prior to before the end of the 5 years registration, at that point of time you can call for documents and be satisfied. But the first registration is in a sense like a provisional registration. It's an automatic thing. You now also have provisions relating to trusts which modify the objects which don't conform to the conditions of registration. And there this application has to be made for registration within 30 days from the date of adoption or modification of the objects. So which was there earlier also under section 12AA. If you modify your objects, you got to, you had that Allahabad High Court decision. Then there have been other decisions which, were taken much more lenient view. They said that so long as your objects are charitable, even your modified objects is charitable, then there is no problem. You would still be entitled to the continuance of the exemption. Merely because you not applied to the commissioner, saying that I'm changing my objects, that does not matter. So now they're saying that no, of course, you had that coming in under section 12AA also when the form 10A was amended. They said that no, you have to make a fresh application for registration under section 12AA at that point of time. So here also you will now have to make an application for registration, and such an application will be regarded like a similar application as or the renewal at the end of the 5-year period. Similar to that, it will be scrutinized completely. Similarly, there is another category, a third category, which will also be scrutinized completely, and where you have to go in form 10AB and not form 10A. So for all these three categories, so So far as re-registration is concerned or new registration is concerned, it is Form 10A, which is almost an automatic procedure. But when it comes to renewal of registration or a trust which has modified its objects and applies again for registration, or a trust whose registration has become inoperative due to application of first provision to Section 11.7, we'll come to that. Section 11.7 gives you an option, and there, under certain circumstances, your 12AA registration becomes inoperative, and you've then got to apply to make it operative. We'll look at that provision separately. But there also, you've got to make your application in Form 10AB, and that application has to be made 6 months prior to the commencement of the assessment year from which the registration is sought to be made operative. So we'll look at that a little more carefully when we are looking at the first provision to Section 11.7. And here again, as I said, the same procedure as cases of renewal of registration. The procedure is fairly harsh, and there will be a complete verification by the commissioner. He'll call for various details, etc. So that is the requirement which is there. Now let's look at the rule. There's a new Rule 17A which has been introduced. The existing Rule 17A has been replaced, and which deals with this. And it says that the application for re-registration and new registration. And these, as I said, are almost automatic provisions. So there you have to make an application in Form 10A. The application for renewal or renewal of provision registration or making an inoperative registration operative, the last three cases which we saw, or modification of objects. So these have to be made in Form 10AB, where there, much more documents are required to be filed, many more details are required to be given, and there will be, it will be subjected to detailed scrutiny by the commissioner. These forms are to be furnished electronically, is what the rule says, and it has to be verified by a person authorized to verify the return of income. So it should be or a director or a managing committee member. When you make an application in Form 10A, the order which the commissioner will grant or registration in Form 10AC. So that is for the new registrations as well as the re-registrations. The registration will be granted in Form 10AC. And simultaneously, a 16-digit alphanumeric unique registration number will be issued. So it's going to be a 16-digit number. And as you know, as if we have enough numbers as it is today, you have a 10-digit PAN, you have a 12-digit Aadhaar number. Now you'll have a 16-digit unique registration number. In between, SEBI had come out with something saying that unique investor number, etc. All that is there. So, I think this is one more number which one has to memorize and one keep in mind, keep the document. I think we're very fond of unique numbers. We can't have universal numbers, unfortunately. I don't know why that this is not there. But so you will have a unique registration number which will be allotted to trust. Now here, this is the, as I said, in the rules. As I said, we saw in the section, what the section says is that before commencement of the previous year for which you are seeking the exemption, you've got to make an application for a new trust. Now, here they're saying that for new registration applicants during the financial year 21-22, the provisional registration will be effective from assessment year 22-23. So therefore, if your trust is set up in June 21, as we said, and you apply for registration, say in the month of July 21, then you will give a given provisional registration, and that will be effective for the full assessment year 22-23. So that is, fortunately, I think the rules have toned down the requirement of the law and made it workable. But the problem still remains: what about subsequent years? Because they're saying that this applies only for new registration applications during financial year 21-22. Now this really should be made applicable for subsequent years also, because how can you make an application for at a point of time when you're not even in existence? A trust which is not even in existence, how can it make an application? Say if a trust is set up in let's say in June 22. It's supposed to make an application by end of February 21. When it was not even in existence, then it is supposed to make an application. Otherwise, it will not get benefit or exemption for assessment year 23-24. Now, I think this is a ridiculous this thing, and which they need to really amend the law. That's the position. In case of applications which are made in Form 10AB, there could be an order of approval, order of rejection, or an order of cancellation, which would be in Form 10AB. So the language in the rule is very important, because in Form 10A they merely refer to order granting registration in Form 10AC. But when it comes to Form 10AB, the order may be an order of approval, or order of rejection, or an order of cancellation. That will be in Form 10AD. Sorry. Yeah. So that is the distinction which one has to keep in mind, that in Form 10A today, I think it is almost an automatic system. In 10AB, it will be something which will be completely scrutinized. Then there is a very extremely harsh provision in the rules, and that says that if you made an application Form 10A and you've been given registration and URN under Form 10AC, you've been given the registration. This can be cancelled at any point of time if the Form 10A has not been duly filled in by not providing fully or partly, or by providing false or incorrect information or documents required to be provided under the rules. Now, this is not a requirement, this requirement of cancellation. I mean, the authority to cancel is not there in cases of Form 10AD, which is, when you make an application in Form 10AB, because that is granted after supervision. Now, here, this is not granted after supervision, and therefore, they're saying that no, if you have given some false or incorrect information, it can be cancelled. Not only it is cancelled, the registration or the URN is deemed never to have been granted or issued. So therefore, it is really applicable with retrospective effect. Now, fortunately, I think they have given an opportunity of being heard in this situation. So therefore, now, but of course, very often the opportunity of being heard is really just a formality. They've already made up their minds. So therefore, it's something which could be a problem. The question is the rule ultra-vires the act? Now, any rule can be only subservient to the act. So therefore, if only the act permits that or grants the rule-making authority to the executive, then only the rule can be made for that. Now, the act has the provision for cancellation of registration only under certain circumstances specified under Section 12AB, subsection 3 and 12AB, subsection 4, which is today there in Section 12AA, subsection 3 and subsection 4. The same provisions are there. So, which is if the trust commissioner find out that the activities of the trust are not being not genuine, or they're being carried out in the manner in which the provisions of Section 13(1)(c) and 13(1)(d) are being applicable to the trust, and therefore it's not entitled to the exemption. So therefore, that is something which they say that there is now so in those cases, yes, that shall continue. So therefore, that is there. But over and above that, question is, can you have a right of cancellation which is given only by the rules? I think this is something which can be possibly challenged. It's something which in case, but so what is important therefore is that when you're filing the Form 10A, please be sure about all the information that you're giving. Please double check it. Don't just leave it to your article clerks to fill up and upload, or just leave it to the trust. Tell the trust, point out to the trust that there are very harsh consequences if you make even a single mistake. It could be regarded as providing incorrect information or false information. So therefore, and when we look at the form, we look at the various clauses, and you'll need to see that you need to comply with all of those. You need to ensure that the information given is correct in all of those. So now let's go on to the Form 10A. Let's first look at the Form 10A. So there you're supposed to give which is the relevant section code under which you're making this application. So whether it is under Section 12A for re-registration, or whether it is for a new registration, whether it is under 1020cc4 for reapproval or for renewal of approval. So similarly, for 5, 6, 6 and 6A of 1020cc. Similarly, Section 80G, and whether it is for a reapproval or whether it is for a fresh renewal of approval, etc. So, sorry, for a new approval, because this form applies only for new approvals and reapprovals, or re-registration and new registration. So, therefore, under that. So, there are 19 different categories which are specified over there, depending upon, and there. So, what happens is that for each of these categories, if you fall under more than one category, for instance, you are registered under Section 12A as well as under Section 80G, you've got to fill up two different forms for that. The form is the same, it is Form 10A. But for Section 12A, you got to fill up one form, attach all the documents. For Section 80G, again, you fill up the document in the same manner and attach, the relevant documents again. So that is the requirement which is there. So you'll have to do it multiple times. So if you're registered under 12A, 1020cc as well as 80G, you'll have to fill it up, all three times. That's the. Then the question, the next question is, what are the nature of activities? Is it a charitable trust? Is it religious, or religious come charitable? So depending upon the objects, you'll have to mention that. Then what is the type of constitution? And there you're supposed to mention either the drop-down menu says it's either a trust, it's a society, a company, or others. Now, very often I think people make the mistake of saying that oh, I'm a trust because I'm registered under the Maharashtra Public Trust Act. And when you ask for the constitution document, you realize it is a society registered under the Societies Registration Act 1860, which is also required to be registered under the Maharashtra Public Trust Act. So therefore, you have two registration certificates. One is the registration certificate under the Societies Registration Act, which is the incorporation of the society. And then you have an approval as a charitable institution under section by the Charity Commissioner under the Maharashtra Public Trust Act. Now here, what you have to do is select your status as a society over here. Then whether it is established under an instrument, and an instrument would include a trust deed, memorandum, and articles of association, that would all fall under instrument. So for a society, it would have memorandum and bylaws. What is the date? Then the next question is, what is the date of incorporation, creation, or registration? Now, for a trust, the date of creation would be the date of trust deed. Now, subsequently, the Charity Commissioner may grant it registration subsequently, but it does not come into existence on registration by the Charity Commissioner. It is merely that, yes, it is registered from that date under the Maharashtra Public Trust Act, but it has come into existence the moment the settler has settled money upon the trustees through execution of the trust deed. So it is not the date of the registration by Charity Commissioner which is important. It is the trust deed which is important. So when you're giving date of creation, you give the date of the trust deed in such a situation, so far as that is concerned. Obviously, you cannot give two dates over here because it asks, there's only one this thing which you have to fill up. So here, I think you should give the date of creation so far as trust is concerned. So far as company is concerned, it will be date of incorporation. So far as society is concerned, it will be the date of registration of the society, because the society comes into existence on the date that it is registered with by the registrar of society. So that is the position. Then you've got to look at the objects. What are the you've got to mention what are the objects, and the objects are from section 215 they picked up. 215 is of course the definition of charitable purpose. So the various clauses of definition of charitable purpose, which is relief of poor, medical, educational, yoga, preservation of environment, advancement of any other object of general public utility, and religious objects. So you got to mention which are the objects. Here you can select multiple objects. So that is the thing. And again, I think here you've got to therefore use your interpretation skills when you look at the objects. Does it fall under multiple categories, etc.? So what are the categories under which it falls? We need to classify. And very often, sometimes there could be two views possible on that, but that's something which is. Now, the next thing is that which is extremely important clause. And, this says that whether the trust deed contains a clause that the trust is irrevocable. Now, why is this asked? Section 11 starts with the section 11, which grants the exemption. It says starts with subject to the provisions of section 60 to 63. And as you know, the provisions of section 60 to 63 deal with a case of transfer of income without transfer of assets or a revocable transfer. So it is that cases. So they're saying that those cases are outside section 1113 because there the income has to be clubbed with the income of the transferor in that situation. So therefore, if it's a revocable transfer, so therefore those cases will not get the benefit of exemption under section 11 is what the law provides. Now, what has been happening is that the CAG has been taking objection very often, saying that you don't have a clause saying that your trust is irrevocable, etc. And sometimes you've been receiving trusts have been receiving show-cause notices. Why should it not be? The question is, what is the correct law in this regard? And therefore, let's look at it this way. Just because you don't have a clause which specifically says that the trust is irrevocable, that does not make the trust, a revocable trust. So normally what happens is that every transfer is revocable unless there is a specific provision which is there in the transfer document. In this case, it would be the trust deed, which says that there is a certain right is retained by the transferor to take back those assets or to take back, at some point of time, or to take back the income from those assets, etc. So if there is that right which is retained by the settler, then only, it would be a revocable transfer. So there has to be a positive clause for revocability. Only then it would be revocable. Just because there is no clause in the trust deed, the normal presumption is that it is irrevocable. So, in fact, if you look at the section 78 of the Indian Trust Act, it says that, what it deals with revocation of a trust. And it says a trust created by will may be revoked at the pleasure of the testator. But other trusts can be revoked only Now, where the trust has been declared by a non-testamentary instrument or by word of mouth, it has to be through exercise of a power of revocation expressly reserved to the author of the trust. So there has to be an exercise of a power of revocation which is expressly reserved to the author of the trust in the trust deed. It's only then that the trust could be regarded as a revocable trust. It's only then that it will be revoked. So also, for instance, you may have a dissolution clause in your trust deed. You may not have a clause saying irrevocably settled, but you may have a dissolution clause in your trust deed which says that in the event of dissolution of the trust, all the assets of the trust shall be given to any other organization having similar objects, etc. Any other charitable trust or society or company having similar objects. So therefore, that also indicates that the trust is irrevocable. And there are a couple of Supreme Court decisions also in this regard which you need to understand. There was this case of Raghbir Singh. These are also cases of trusts. Of course, some of them were private trusts. These were private trusts, but the similar principles were applied. In Raghbir Singh's case, the Supreme Court said the proviso contemplates cases in which there's a provision for retransfer of the income or assets, and such provision is for retransfer directly or indirectly. It also contemplates cases where there is a provision which confers a right upon the settler to reassume power over the income or assets directly or indirectly. It is the provision for retransfer directly or indirectly of income or assets, or for reassumption of power directly or indirectly over income or assets, which brings the case within the first proviso. Cases in which there was a settlement, but there was no provision in the settlement for retransfer or right to reassume power, do not fall within the proviso, even if as a result of the settlement, the settler obtains a benefit. So they're saying that in such a situation, there has to be an express clause which allows the settler to take back the income or assets or resume power over those income or assets. It's only then that it could be regarded as a revocable transfer. Similarly, in the case of Jayantilal Amritwal, the Supreme Court said the words reassume power give indication to correct meaning of the proviso. The latter part of the proviso contemplates that the settler should be able, by virtue of something contained in the trust deed, to take the power he had over the assets or income previous to the execution of the trust deed. So the Supreme Court has very clearly spelled this out. And then they said, coming to the various clauses of trust deed, there's no doubt that the settler had power to see that his wishes were carried out while he was alive, but he could only direct the carrying out of his wishes within the terms of the trust deed. What he could direct under the clause 4 was the application of income to a particular charitable purpose. So therefore, here there was a clause which the settler had kept that while he was there, he was also be a trustee, and he could direct for what charitable purpose the money could be spent. So therefore, he could only apply for charitable purpose which fell within the objects, is what the Supreme Court said. So he could not reassume power. The power to direct for which charitable purpose it should be assumed does not amount to a situation where it's a power to reassume control. So that's what this, or the power to suggest what investment, the fund or investments. So that does not amount to reassuming of power over the assets, etc. And so therefore a truster, for instance, the trustee could not the settler could not legally direct a loan to be made to himself. That's how they looked at the trust deed. Then what are the other clauses? So I have looked at that. So therefore, now the question is really this, that what do you answer if, say, for instance, today, if you have no clause in your trust deed saying revocably or irrevocably, you have no clause over there saying that it's irrevocably transferred, then I think you should say no. Frankly speaking, yes, there could be some litigation when you apply for renewal subsequently. But even if you say no, okay, it will invite greater scrutiny, but at least you will not have a situation where it will be cancelled because of non-declaration. Similarly, where you have a clause which says, merely says that, there's a right to, now that's an indirect showing that yes, there's no right to reassume control. And therefore, I think in such cases also you should say no, that there is no clause in the trust deed saying that the trust is irrevocable. I think that's the way one should look at it, to ensure that one does not make a wrong statement. Then whether registered on Darpan portal under FCRA or any provision of the Income Tax Act. So this would include your 12A, ATG, etc. So you have to give a registration number, date of registration, authority granting registration, and date from which the registration is in effect. Now, Darpan registration details are mandatory only if you are receiving or entitled to receive any grant or assistance from the central or state government. If that is not being received, then that is not mandatory to be given. So that is, I think, so that is one thing. Then whether any application made in the past for a registration under section 12A or 12AA or ATG has been rejected. Now, There could be a situation where that had been rejected, you had got an appeal to the tribunal, or you had got a writ to the High Court, and your writ was admitted and you are directed to be granted registration, or the tribunal struck down the order of the commissioner and you are granted registration. There, I think you will have to say that no, it has not been rejected, because that order of rejection no longer stands. It is no longer valid. And therefore, in that situation, your answer will have to be no, because of the fact that that is no longer valid, rejection. Then you're required to give the details of the author, founder, settler, trustees, or members of the society, or members of the governing council or directors, or shareholders holding 5% or more of shareholding, or the names of office bearers on the date of the application. What is the name? Relation means whether it's author, founder, settler, or trustee, etc. So within that category. Then the unique identification number. What is the type of unique the unique identification number, which is either a PAN number or the Aadhaar, and the ID code. So ID code, there's a drop-down menu which says PAN or Aadhaar. So therefore, if you're giving the PAN, you will say PAN, and that is the PAN. Or if you're giving the Aadhaar, give say Aadhaar and give the Aadhaar. That is the way. The address, mobile number, email address of each of these. Of course, if the settler has passed away, then obviously you don't need to give the name of the settler or the simple where they passed away. They would not have an Aadhaar number, they would not have a PAN number, etc. So that obviously I think you don't need to give that in. If any of the above is not an individual, and then you say it's a body corporate, or then you have to give the names of natural persons who are beneficial owners of 5% or more of that body corporate. Then you have to give the details of that as well. So that is the position. The next question is whether the return of income is filed for the last assessment year for which due date of filing of return has expired. Now, this field is auto-populated this is effectively for assessment year 2021. Have you filed a return of income for that for assessment year 2021? So this field is auto-populated. But in law, even a belated, I don't know. I mean, I've not had the experience as yet of filing these forms and or the situation of filling up too many forms as yet. But the question here is that if you file a belated return, you would have lost the exemption under section 11 to 13. The question is that also amount to filing of return for that year? I think if you file it before 31st March, yes, it should amount to. Though exemption under 11 and 12 may not have it available, you file your return. Now, can the application be rejected if the return is not filed? I think that's not the position. If the return is not filed, you're supposed to give certain additional financial information. It's not that your application will be rejected. Now, this is the financial information you have to give if the return is not filed. And, this is situations where, in cases of fresh registration or approval and where you file in Form 10AB, you've got to give these financial details. Similarly, in the case where you're making an application for re-registration or new registration, there you've got to, if you've not filed the return of income only, then you've got to give this information. And what is this information? What is the corpus? What are the funds and reserves and surplus other than corpus? Now, question is very often, what do you mean by corpus? Is it only the corpus, the name corpus which is there, or would it also include, say, a reserve fund or a building fund, etc.? Now, what is the meaning of corpus? Corpus means capital. So any fund which is of a capital nature would be regarded as corpus. If a fund is not of a capital nature, then it would not be regarded as corpus. It would then fall under that fund or / reserves and surplus other than corpus. Similarly, your surplus in the income and expenditure will fall under reserves and surplus other than corpus. Then you are required to give long-term liabilities, other liabilities, land and building, other fixed assets, investments or deposits in the mode specified under section 11.5. As you know, under section 11.5, you have to give the various details of investments, etc. And other investments, 11.5 stipulates what are the approved investments which are permitted for a charitable trust. Other investments or deposits also you're required to give over there, and what are the other assets. And then income received in the 3 immediately preceding years, that is grants from the state or central government, grants from companies under CSR, other specific grants, so which could be for capital grant or it could be a revenue grant, and other income. So grants from central government or state government or specific grants could be either by way of corpus, or it could be by way of revenue grants. But grants from companies under CSR typically are for spending and therefore, generally are revenue grants, but there may be corpus grants, for instance, where there is some activity which is intended to be carried out, say, for instance, school children in schools, you'll be buying, say, tablets for them to study, etc. So you might have received a grant for that. And those tablets are your assets, and therefore it's for capital purpose, and therefore it would be a grant under CSR, but which is for a capital purpose, and it would be regarded as spent under CSR the moment those assets are acquired. So as I said, financial details are to be given only when it's an application for fresh registration or for re-registration, and where the return of income has not been filed for the last assessment year for which the due date has expired. Now, there is a practical difficulty because you're supposed to give details as of the date of application. There is no time gap which is allowed. Now, frankly speaking, whether 1 week old data is good enough, whether 1 month old data is good enough, I think there is no clarity on that. That is something which one will have to wait for clarification on. There are some FAQs which are there on the income tax e-filing website, FAQs in relation to Form 10A, but that also, those FAQs also do not clarify on this aspect. As I said, corpus funds, capital funds such as building fund will have to be shown as corpus and not as other reserves or surplus. Now, if you're following cash method of accounting, should you disclose liabilities? I think no, you don't need to, because what you're required is, as per your accounts, is what you're required to show. Fixed assets, what do you show at cost, written out value, or book value? I think here what you'll have to do is book value, because it's as per your accounts. This is in lieu of your accounts that they're asking for this, and therefore you give the book value, is what my understanding is. In case of application, when you make an application for fresh approval under 80G, so there further details are to be given for the earlier 3 years if expenditure of religious nature is incurred. So there you're supposed to give what was the total income of the earlier 3 years, what is the expenditure of the religious nature for those earlier 3 years, and what is the percentage of the total income. So as you know, under 80G, if you're a charitable come religious organization, and you will be entitled to 80G, provided you spend not more than 5% on the religious objects of the trust. So therefore, it's important that this the percentage which they want this figures of percentage of total income. Now, when you're looking at total income, you've got to look at it on a commercial basis, expenditure on religious nature also on a commercial basis as to what is the application. Now, if it's debatable whether expenditure is religious or not, unfortunately, there is no provision for disclosure over here. If you look at it, I think a couple of participants have raised their hand, but I think, as I said, I'll take questions at the end because, that will enable me to complete this, and leave 15-20 minutes for question answers. So please put your questions in the chat box. I think those who raised their hands. If there's it's debatable whether an expenditure is religious or not. There is no provision for disclosure. For instance, today many people have, say, for instance, lectures on philosophy. Now, is a lecture on philosophy or religious or not religious? Now, if it's on various philosophies, possibly one would say that no, this is not a religious nature because it is of all different religions, not only a particular religion. Religious means for a particular religion, and that's how one would have to look at it. Of course, there are tribunal decisions which have said that learning of Vedas is, for instance, the way of life, and therefore learning of the Vedas amounts to a charitable purpose, teaching educational and not religious in nature. But there the matter could be debatable. It's something which there could be problems, and unfortunately there's no clarity on that as to what one should do. I think therefore one would have to rely on case law. One would have to rely on this for this purpose to decide whether to show it as religious or not. Then what are the documents that you will file along with the Form 10A? In cases of re-registration, you will file a self-certified copy of the instrument of creation or establishment, the trust deed or the memorandum and articles of association, etc. Then a self-certified copy of the registration with the register of companies, the register of firms, register of societies, or the registrar of charity or public trust, which is the charity commissioner here. As I said, for a society registered under the Maharashtra Public Trust Act, what you should do is enclose both the society registration certificate as well as the public trust registration certificate from the charity commissioner. Both, I think, you should enclose in this situation. If you're registered under FCRA, the self-certified copy of registration under FCRA has to be enclosed here. The order granting registration under 12A or 12AA or 12AB, in that situation, you've got to enclose a copy of that order also. So whatever the existing order which is there, so you've got to enclose a copy of that. and self-certified copies of financial accounts for 3 years preceding the financial year in which the application has been made. Now, there is a practical difficulty so far as March 21 accounts is concerned. I think you will have to make provisional accounts and upload it along with this, saying that okay, these are provisional accounts and we are enclosing the provisional accounts, because it is not required to be necessarily to be audited. What one will say is that this is a self-certified copy, and on the top one will say that this is provisional accounts. So therefore, I think that should be the requirement, and that should suffice in this case. In cases of new registration, Form 10A is to be accompanied by documents. Besides these documents above, you're required to, if there is a business undertaking which is held in trust under Section 11.4. Now, 11.4 deals with a business which is incidental to the attainment of objects of the trust, where separate books of accounts are maintained. So there, self-certified copies of 3 years annual accounts and tax audit report under 44 AB is required to be enclosed along with the Form 10A. If there was an order which was rejected your registration under Section 12A, 12AA in the past, you are required to enclose that order. Now, the question is for how many years back? Suppose your registration was rejected, say 15 years back or 20 years back, should you still enclose that? I think so, yes, because there is no time limit granted for that. If it was rejected and that rejection has been held to be valid by tribunal or it has become final, you've not gone and appeal against that, then in that situation, I think you will have to mention that, you'll have to enclose that. As I said, the new application cannot be rejected. Provisional registration seems to be automatic. Now, for cases of new registration, obviously, there's no question of enclosing an order granting registration on 12A, 12AA, or 12AB. Obviously, that is something which is not required. In cases of renewal of registration under Section 12A, 12AB, after the period of 5 years or 6 months before that when you apply, so you'll have to file your application in Form 10AB, and the additional details which are required to be given in that Form 10AB, besides Form 10A, whatever information you give, it also has clauses for this following additional information. What is the school, college, university, hospital, yoga institute, religious place, any other institution which is managed, controlled, or administered or owned by the applicant, so by this trust which is applying. And you're supposed to give the name, nature of activity, the address, whether it's owned by the applicant. Now, applicant may be merely managing it, it may not be owning it. You're required to give that. Then also you're supposed to give the name, contact number, and email ID of the person in charge. Now, I don't know what purpose this will serve, because you already have the name, contact numbers, and email IDs of the trustees or the governing body members and or office bearers. Why do you need of each institution? But this is something which possibly very often one gets requests from the department, as saying that please assist in admission for hospital or school or this. Maybe it was from that perspective that they are collecting this information. I don't know. I mean, frankly speaking, it really doesn't serve any purpose from a legal perspective for having this of the institution. Then, if a business or undertaking is property held under trust under Section 11.4, nature of business, address, and whether separate books of accounts are maintained, you've got to give. And in case there's any income, nature of profits and gains of business, then whether the business is incidental to the attainment of objects, which is 11.4a, and what is the nature and address of the business, and whether separate books of accounts are maintained. Now, 11.4 and 11.4a, the distinction between them is, if a business is settled upon the trust for the income of that business to be used for the charitable activities. So the settler was carrying on that business, he settled that business upon trust on this, then that is a business which is property undertaking, which is property held under trust. But in a situation where in the course of carrying of its activities, it may be carrying on certain activity, it will be regarded as business, then that business has to be incidental to attainment of main objects. You have got 20 separate books of accounts, as I said. And now you want to mention that, affirm that it is incidental to attainment of objects, what is the nature of that business, the address of the business, and whether separate books of accounts are maintained. Then all bank accounts held by the trust, you're supposed to give IFSC code, name of the bank, bank account number. All land and buildings held by the trust. Now, this could be a challenge for many trusts. You're supposed to give the address, size in square meters, what was the purchase consideration, stamp value at the time of acquisition, mode of acquisition, whether it was acquired or gifted, date of acquisition. Now, this could be a problem for trusts like, say, as I said, St. Xavier's School, for instance. Now, St. Xavier's School, now, I don't know whether they would have what is the purchase, what is the stamp value at the time of acquisition. Because at that point of time, one doesn't know whether there was such a concept of stamp value at all. So there could be a situation like that. At least you would have maybe the purchase deed, or you would have the. But For trusts which are holding multiple properties, I think this is going to be a huge challenge, collecting all this information and putting it together. And that is why I think this extension of date from 30th June needs to be is something which is sorely needed for larger trusts, because they will have problems on collecting this information. And some, particularly since some of them are extremely old trusts, the original documents are very often kept in a bank locker, where the trustee have to go and then get those from the bank lockers. In this time with the lockdown, they are not able to go to bank lockers, not able to get it. And give all the details. So this is sometimes a problem for the trust. In case of advancement of any other object of general or public utility, if that is one of your objects, then whether you're supposed to state whether it involves carrying on any activity in nature of trade, commerce, or business, or in relation to trade, commerce, or business for a cess, fee, or other consideration. Now, this, as you know, is because of the proviso to 215. They've asked this question, so therefore you've got to give this answer for this. Then, and also whether activities are undertaken in the course of actual carrying out of such advancement of any other object of general public utility. Now, there are various decisions of the courts which have said that if this activity is undertaken in the course of the actual carrying out of your objects, then that would not be, and it is really incidental to your objects. Then I think it would provided to 215 would not apply. You would be entitled to the benefit of the exemption, and therefore that's something which will apply in this case. You're supposed to give the details of receipts from such activity. You're supposed to give the total receipts, the aggregate receipts from such activity. So out of the total receipts, how much is the aggregate receipts for such activity, and percentage to total receipts, and remarks. Now, this is because of that limit which you have under the proviso to 215, second proviso, where if it does not exceed a specified percentage of that, 20% or 25%, whatever the limit currently is. So if it does not exceed that, then the first proviso would not apply. So that's where this is for that purpose. Then in case of renewal, when you go now for renewal, whether it is re-registration which you're going for renewal, or provisional registration which you're going for renewal, or it's for making inoperative registration operative, or modification of objects, you have to file Form 10AB. And for Form 10AB, which are the documents that you'll file, the first few documents are the same, if you look at it. The problem really is when it comes to business or profession, there could be cases where there's litigation ongoing as to whether activities in the nature of business or not. And there, this still asks for annual accounts of business and tax audit report. I think this may be a bit of a problem in such cases where you're clearly of the view that this is not a business. Then I think one can say that this is not a nature of business activity, and therefore one is not including that. If you adopted or modified the objects, then you've got to give self-certified copy of the documents of, it could be a court order, it could be charity commissioner order, it could be the resolution which has been filed then with the ROC, etc., general body resolution, or society may have filed a resolution with the registrar of societies. So, and you are required also to give a note on the activities of the trust or institution. All this will help them to look at which is so then let's look at so come to 1023C. So 1023C is similar to section 12AA. Sorry, can you hear me? I think this was unstable. So let's come to 1023C. I'll just repeat myself. 1023C. You're supposed to make it for wherever you are approved under clauses 4, 5, 6, or 6A. You're supposed to make an application for reapproval to the commissioner within 3 months from 1st April 21, just like your 12AA registration. Now, this does not apply to clauses 3AB, 3AC, 3AD, and 3AE of 1023C. What are 3AB, 3AC, 3AD, and 3AE? So 3AB and 3AC are medical institutions or educational institutions which are wholly or substantially financed by the government. And 3AD and 3AE are where the situation where the gross receipts are less than 1 crore rupees. So now that 1 crore limit is extended to 5 crore, we'll just look at it in the next slide. But if it's less than 5 crore rupees, then you still don't need to go in for this approval. And the provisions are the same as as you saw. The form is also the same. It's Form 10A, so the same provisions which are there. In case of new approval and renewal of approval, the same timelines and procedures for Section 12AB renewal, except that you don't need to go to the commissioner in case of adoption or modification of objects. because there's no concept of fresh approval in the context of section 1023C as there is under section 12AA or 12AB now. And again, there is no concept of an approval under 1023C becoming inoperative, just like your registration under under section 12AB becomes inoperative. There is no concept like that. Now let's look at what did the Finance Act say. The Finance Act, as you know, you had clauses 3AD and 3AE. And 3AD and 3AE, I'm looking at that because that based on the limits. If you exceed these limits, then you have to go under clause 6 or clause 6A. So it deals with the university or other education institution or hospital for reception, etc. There is a complete exemption of income, but only the condition is that it should be existing solely for educational or philanthropic purposes and not for purpose of profit. And if the aggregate, the position today was that if the aggregate annual receipts of such university, hospital, or institution do not exceed the amount of annual receipts as may be prescribed, and that was prescribed in Rule 2BC of 1 crore rupees. So it was each university or educational institution or each hospital or medical institution which had to be considered separately, and not the trust as a whole or not the society as a whole which had to be considered. Now from assessment year 22-23, that limit is raised to 5 crore, but that limit applies vis-a-vis the assessee. So it will apply vis-a-vis the person from such university, educational institution, hospital or institution, and aggregate of all these educational institution, hospital, you look at the aggregate, not separately. So saying that, okay, hospital is less than 5 crore and educational institution is less than 5 crore. No, because if the total of the two exceeds 5 crores, then you will have to go in for 1023C approval in that sense. And the finance minister's speech, I mean, the way it's been put as of it's to reduce the compliance burden on small charitable trusts running education institute hospital. It is proposed to increase the limit on annual receipts from these trusts from present 1 crore to 5 crore. So just to give you an example, say for instance, take the institutions such as say the Vilepali Kerivani Mandal. Now it runs various colleges such as NM College, NM IMS, Jitendra Chauhan Law College, engineering colleges. So there are 20-25 institutions. So far, the position was that for each NM college, for Mitibai College, for NM IMS, if each institution's gross receipts were less than 1 crore, they did not need to seek approval. Only those institutions where the gross receipts were more than 1 crore, they needed to seek approval. So that was the requirement. Now what you have to do is aggregate all the receipts of all these colleges and schools and see if it exceeds 5 crores. And if it exceeds 5 crores, the trust or the society needs approval. That's the way it will now operate. So, what will happen is that for those entities which are running multiple institutions, this may be, even earlier, if they may have been following approval was not required under clause 6 or 6A, now they will require perhaps, or vice versa. It could be work both ways. Explanatory memorandum again is not very clear on that. They've just said that it is give the benefit and why they're doing it for aggregate, etc. So as I said, it could work both ways. Trust with multiple institutions may now require approval, or though they did not require approval earlier, or they may have been approved earlier, and now the whole trust will have to approve, will have to apply for 1023C. So the new approval is now required from 1st April 21, and it will first be a provisional approval for a period of 3 years. If the trust was earlier also, it was registered under 12A to 12AA, choice would need to be exercised under the proviso to section 11.7, whether to renew 12A, 12AA or to opt for 1023C. And, institutions where the trust is now falling below the threshold, they need not apply for renewal of approval. So it's below 5 crore, then you don't need to go in for that. And when you're looking at the income, you have to look at the gross income. Very often, in the accounts, what happens is the net income of each institution comes to the profit and loss account of the trust or society. Now, here you have to look at the gross receipts, so not at the net income of each institution, not the net surplus or loss of each institution. Look at the gross receipts and aggregate all of those gross receipts together to look at whether this cross that limit of 5 crore or not. For 1023C, you have this rule 2C, which is replaced by a new rule, and as we said, form 10A for approvals and new approvals, reapproval and new approvals, and 10AB for renewal of existing or provisional approvals. Similarly, electronically, you will have a URN, the same, the thing that cancellation, etc. provisions are almost the same as 12AA. Now let's go to this option under section 11.7. Where a trust is registered under 12A, 12AA, 12AB, then, what it is provide until 1st of June 2020, the provision of law was that if a trust is registered under section 12A, 12AA, 12AB, then no exemption would be allowable under section 10, except under clauses 10(1) or 10(23)(c). So except these two. Now to that, they've also from 1st June 2020, they've also added clause 1046. 1046 are those institutions set up by, which are semi-government institutions, etc. So those are the ones which are, autonomous bodies, etc. So, so that is the one which is coming out there. So you have a, if you're claiming 12A, you're registered, then you cannot get anything except 10(1), 1023(c) or 1046. Now, there are two provisos which are inserted with effect from 1st June 2020, and there is no change in the date by this Taxation and Other Laws Relaxation and Amendment of Certain Provisions Act 2020. So these provisos still will remain with effect from 1st June 2020. And what does this proviso say? The first proviso says that the registration will, which is under section 12AA, will become inoperative from the date on which the trust or institution is approved under 1023(c) or notified under 1046, or from the date on which the proviso has come into force, that is 1st June 2020, whichever is later. And since this has come into effect from 1st June 2020, as on 1st June 2020, you have to look at it this way. Is it, approved under 1023(c) or under 1046? If yes, then the 12AA registration has become inoperative from with effect from 1st June 2020. Second proviso says that you can apply to get this registration operative under section 12AA or 12AB, and once you do that, your approval under 1023(c) or the notification under section 1046 will cease to have effect from the date on which the registration becomes operative. Thereafter, it will not be entitled to exemption under those clauses. So therefore, and if you see the explanatory memorandum, which I have given in a little later, but I will not deal with it in detail, because I will not want to waste time on reading it in detail, because we've got a lot of ground still to cover. Basically, what they're saying is you have a one-time choice that if today, you have 1023(c) or 1046, you can continue with that. But if you want to go under section 11 and 12, you can do so, but you can do it only once. Once you have done that, your 1023(c) and 1046 ceases to have effect. That and you cannot go back then to 1023(c) or 1046. So therefore, there's a presumption that you have opted for 1023(c) or 1046 in preference to section 12AA or 12AB, and you can go back once. You can go back to 12AA or 12AB, and then you cannot go back to 1023(c) or 1046. But there's one very interesting thing which is there in this FAQs, which is there on this form 10A, and that is FAQ 3. It says that a trust is already registered under 1023(c) of the Income Tax Act 61. It wants to obtain registration under 12A. Is it eligible to file form 10A in such a case? Now they're saying no. If the applicant is already registered under 1023(c), it is not eligible to obtain registration under 12A, and hence it will not be allowed to file form 10A for section 12A registration. So it is only in a situation where you are registered under section 12AA as of 1st June 2020 that you can choose to go back to section 12AA, because it has become inoperative. And then also you will have to file the form, and that form will have to 10AB you will have to file. That 10AB will have to be filed by 30th September 2021 if you want it to be operative from assessment year 22-23. So for assessment year 21-22, you will necessarily have to go under 1023(c) or under section 1046 as the case may be. And you can go back to section 11 or 12 only from assessment year 22-23. So that is the way the provision would read. Now this provisos, they don't apply to clauses 3AB, 3AC, 3AD or 3AE, because in those cases there is no concept of approval at all. So therefore, there in those cases, I think the option is still available by virtue of the main section. I think that option will still be available. So it's only in cases of 6 and 6A where that option is a one-time option which you have to exercise. But otherwise, in these cases, you can opt for it in either year. Now, of course, one would not rule out an amendment coming in subsequently saying that, okay, no, in these cases also, it is saying that you either choose 1023(c) or choose 12A with retrospective effect also. That these days retrospective amendments are the order of the day. So therefore, I don't know, this may also become something which we could split. And the explanatory memorandum gives, they say that the anomaly needs to be addressed since they constitute a complete code. Once it has opted for a particular registration, it flows that the condition in relation to that should be complied with, and option of switching and convenience should not be available, is what they're saying. So once the switching will be allowed only once, so that switching is not done routinely and it remains efficient to be administered. So there is this anomaly of the effective dates, because that is from 10 June 2020, whereas your listing is from 1st April 21 that you got to. So, your 10, 12 cases where you're both registered under both sections, 1023C as well as 12A, what happens? Your 12AA registration becomes inoperative from 1st June 2020 has become inoperative. If you want that, you've got to make it applicable or to apply to make it operative. For assessment year 21-22, the application has to be made by 30th September 2020, which is obviously not possible. So for 21-22, you therefore have to necessarily go under 1023 or 1046. But for assessment year 22-23, you can do it by September 21. But you'll have to make that application by September 2020. Form 10AB, unfortunately, is not yet available on the Income Tax Department website. It's only Form 10A which is there. So therefore, one will have to wait, and as soon as the form is available, then one will have to exercise that option. And so this is something which we'll have to keep in mind. And just to give you an idea of how to make a choice, just a comparative analysis I've prepared of between Section 1011 and Section 1023C, 6 and 6A. Under both sections, audit is required. Accumulation of the 15% is available under both. The option to spend in subsequent year is not there under 1023C, but it is there under Section 11. The accumulation for 5 years is there under both the sections. For under Section 11, you've got to file the form number 10. For under 1023C, there is no form which is required to be filed. If the accumulation is not spent within 5 years, there is a loss of exemption under 1023C, a complete loss of exemption. Under Section 11, the unspent accumulation will become taxable in the 6th year. Exemption for corpus donations is there under for both types of organizations. Applicability of 115TD. Interestingly, for 1023C, that does not apply. But for Section 11, yes, it does apply. So, educational institutions which are very old, etc., they may prefer to go under Section 1023.
Gautam bhai, we can't hear you.
Sorry. Yeah. Just a minute. Yeah. Restriction on investments. Sorry, my internet connection, I think it's showing it's unstable. Just a minute. Yeah. Can you hear me now?
Yes. Yeah. Yes, we can hear you, sir.
Yeah. So, I mean, the table is obvious there. Restriction on investments is there for both. Restriction on benefit to specified persons under 13(1)(c). You lose your exemption under Section 11. Under Section 1023C, surprisingly, there's no such provision, but of course, your registration could be cancelled maybe at, when you go in for renewal at that point of time. So, then looking at Section 35(1), I think, it's quite similar. The only difference here is that the application, there's a separate form now. Here also it's in Form 10A, which you are required to do. So it's quite similar to your 12AA or your 1023C. For new approvals, there is no concept of provisional approval for 3 years. The same Rule 5C continues for that. Only there, the form is replaced by one combined Form 3CF. Depending on the type of research that you're carrying on, there was Form 3CF1 and there was Form 3CF2. Scientific research was one category and social and statistical research was another category. Now, all three is just one common Form 3CF to be filed electronically for new register approvals. Then coming to ATG. ATG also, you have a similar thing that your ATG, which was valid in perpetuity, which amendment came in 2009. Now they're saying that you've got to make an application for reapproval under 1020 under ATG. Again, the same timelines are there. Automatic this. And after the end of the period of 5 years, whatever time you're given before the expiry of 6 months before that, you've got to make an application for renewal. At that time, the commissioner can call for all documents and make inquiries about genuineness of activities and all the conditions which are laid down in ATG 5. And then he will grant you renewal. That's just similar to that. So far as new approval and ATG is concerned, they have to be made again here also 1 month prior to the commencement of previous year relevant to assessment year. And here also, fortunately, the rule the rule takes care of this in all cases, even subsequent years. Pending applications automatically converted into application under the new procedure. Now, while the section does indicate that no approval for financial year which trust is set up, the rule says something different. We'll look at that. So therefore, let's not spend time on that. The provisional approval for new cases, the provisional approval will be for 3 years, just like a 12AA. and automatically it will be granted. And then for regular approval, you've got to make before the same way within 6 months prior to the expiry of the 3 years, or within 6 months of commencement of activities, whichever is earlier. So that's it. Yeah. Now, this concept, was under ATG, was earlier there. Every 3 years or 5 years, whenever they would give you for 3 years or 5 years, and they would ask you to apply for renewal every time. At that point of time in 2009, they did away with this. And that time they said, due to this limitation imposed on validity of such approval, approved institutions of funds have to bear the hardship of getting the approvals renewed from time to time. This is unduly burdensome for bona fide institutions of funds, and also leads to wastage of time and resources of the tax administration in renewing such approvals in a routine manner. Now, at that point of time, it was leading to wastage of time of the department. It was unnecessarily burdensome. Now, has it ceased to be burdensome? Has it become does it not lead to wastage of time and resources? I don't know. I mean, it's just the attitude of the tax department which has changed, unfortunately, and it's not anything else. The reasons which are given are still continue to be valid today, but unfortunately, I think now they're coming back to this approval every 5 years. And then looking at the rule which is there, your rule 11AA is replaced by a new rule 11AA. It's not a consolidated. I said multiple forms have to be filed for separately for 12A, and for ETG you have to file separate forms, file them one after the other. Unless you complete and submit the first form, you cannot file the second form the way it works. So therefore, ideally, of course, you should do your 12A first, and then you go for your ETG. But once you filled one form, then everything, all the information is already there, and then it should be easy for you to fill up your ATG on the same identical manner, and that can be done because the same documents are really required to be enclosed. Form 10AB is the form for renewal, just like the other thing. Your 16-digit alphanumeric registration, unique registration number will be issued. Now,
Gautam bhai, we can't hear you.
sorry, I'm really sorry about the. Is it clear now?
Yes, now we can hear you, sir.
1 second. Again, internet connectivity. Yeah. Sorry. Again, the internet has been acting up. Basically, the provisional approval is effective. Fortunately, here the provision now is that the provisional approval is effective from the date of the order. ATG 5, as you saw, it's from the assessment year following the financial year in which the application is made. So, so therefore, fortunately, I think this, rule which says that the provisional approval will be effective from the date of the order, that will apply. And therefore, from the date that the certificate is granted, from that date, ATG will apply, is the way. And similar to your 12A, your rejection, approval, rejection, cancellation will be Form 10AD in case of, similar provision for cancellation, etc. is there. Now, there is a new requirement of a statement of donations which is required to be furnished. There's a periodical statement in the prescribed form have to be furnished to the tax authorities, and there's an issue of certificate to the donor containing amount of donation and other prescribed particulars. So these are prescribed as additional conditions for applicability of ATG. So if you don't do this, then your ATG is not valid, is what it seems the way it is worded. And the reasons given, if you look at the finance minister's speech and the expected memorandum, it's quite different. The finance minister says it is because it is proposed to pre-fill the donee's information in the taxpayer's return on the basis of information of donations furnished by the donee, and this will result in hassle-free claim of deduction for donation made by the taxpayer. Whereas the explanatory memorandum says that there is no, it is now, they want to have one-to-one matching between what is received by exempt entity and what is claimed as deduction, and similar to TDS, etc. So they want to have a matching of that to ensure that. And therefore, the entities receiving donation may be made to furnish a statement and to issue a certificate to the donor payee, and claim for deduction to the donor will be allowed on the basis of that statement only and certificate. And in order to ensure proper filing of the statement, levy of fee and penalty may also be provided in cases where there's failure to furnish the statement. And explanation 2A is inserted that the claim of deduction will be allowed on the basis of statement of donations furnished, subject to verification under the risk management strategy formulated by the CBDT. So therefore, just like you have your TDS return, so you'll be filing a statement of donations. Now, will you be an assessment of this, just like your TDS assessments, etc.? I don't know whether that is this thing. There may be now inquiries whether this information is correct, what is the thing, etc. There's a fee prescribed for default in relating to the statement of certificate for failure to deliver the statement of certificate within prescribed time. The fee is 200 rupees per day, but fortunately, less like TDS, the fee cannot exceed the amount for which the failure occurred. And that fee is to be paid before delivering the statement or furnishing the certificate. Now, this fee seems to be per day for each certificate. So if you have delayed in issuing 50 certificates for 20 days, so 50 into 20 into 200. That's where the way you will calculate the additional fee. What is the statement now? They've inserted the rule 18B, and the statement they've said. Fortunately, they've said that this is you've got to furnish it belonging from the financial year 2021-22, and that is to be furnished in Form 10DB, and that is to be filed by 31st May following the financial year in which the donation is received. So this first statement will have to be filed by you by 31st May 2022 for the financial year 2021-22. This is what the file. They said that multiple forms 10DB can be filed. So if you missed out something, you can file another form 10DB also. Extra supplementary form 10DB can be filed. So that is possible. Now, when you're in the form 10DB, you're supposed to aggregate the donations made by each payer and the total amount of the donations made by him. And they say, while you're doing that, you take into account all donations of the same nature paid by that person during the financial year and proportionately attribute the value of the donation or aggregate value of all donations to all persons if it is a joint donation, and whether no proportion has been specified to the donors, you attribute equally to all the donors. So that's the way they say you've got to divide it amongst the donors. If they are joint donors and they've not specified, you divide it equally. Otherwise, if they specified the ratio, then you include that ratio. What is the statement required to give? You're supposed to give the unique identification number of the donor, that is his PAN or Aadhaar number. The section code, whether it's under 80G or 35(1)(2)(a), and 2 and 3 also you're required to give this now. What is the name of the donor, the address of the donor? What is the donation type? Corpus, specific grant, or others? So if one particular donor has given certain corpus donations and he's also given other donations, you'll have to give 2 separate line items. Similarly, mode of receipt, whether in cash, in kind, in electronic modes, account pay check or draft, which includes account pay check or draft electronic modes, and others. So if a donor has given donations of different types or in different modes, then you have separate rows you'll have to show. So it depends. If it's given partly by check and partly in cash, then you'll have to show those as 2 separate lines. So you'll have to aggregate those donations. And if some of those are corpus and this, so therefore you'll have to further bifurcate that and show in separate lines. That's the way you have to fill up this form. Certificate of donation, has to be given in Form 10BE, and the deduction is not available unless the certificate in the prescribed form is issued. So the certificate has to be given Form 10BE, specifying the amount of donation received from the donor during the financial year, starting from the financial year 21-22, just like your statement of donation. This certificate is required to be furnished by 31st May following the financial year which donation received, that is 31st May 2022. Question here is whether certificate is to be issued to all donors or only to donors whose donation qualifies for reduction under ATG. For instance, donations in kind. Now, donations in kind are not eligible under ATG, but are you required to give the certificate? I think no, you should not, because then you are saying that this is under section ATG, it is eligible is what you're saying. Similarly, for donation cash exceeding 2,000 rupees, that is not eligible under ATG, so therefore you're not supposed to give technically. But and if ATG state reductions to be allowed on the basis of statement of donations filed, then what is the purpose of issue of such certificate? It's just like your 26AS and your TDS certificates today. If on the basis of 26AS they're giving credit, then what is the need of the TDS certificate? Or TDS certificate is meaningless, frankly speaking, except it helps you see the deductor has made a mistake, by putting a wrong PAN. If it's not appearing in your 26AS, you can go to the certificate and say, oh, he made a mistake, and therefore then you can ask him to revise his return. That's where possibly it's for that purpose that this requirement is there. Just like 26AS, I mean, in your what they call now as the annual information statement, possibly this donations will also start appearing there, and it will automatically be picked up from there. The form 10B looks like this. You have the PAN of the reporting person, name, address of reporting person, the order number granting approval under 80G or notification number under section 35. What is the date of that? The PAN number or Aadhaar number of that individual. What is the name of the donor, address of the donor, amount of donation received, financial year in which the donation was received, and type of donation. So I think I think we should advise our clients right now that you please start maintaining this information right now from respect to all donations, because this will be something which you will require to furnish the statement, you'll require to furnish certificates. So it's something which you need to start right now, starting this process. So then there's this expected memorandum, Finance Act 2020 gave the receipt, which I will not see. So let's then come to the last category of the thing which I wanted to discuss, and which is on corpus donations corpus donations which are exempt under section 11D today, if they are made with a specific direction, that they shall form part of corpus. Now, from assessment year 2022-23, the exemption is subject to an additional condition that such donation should be invested or deposited in the mode specified under section 11(5), maintained specifically for such corpus. So therefore, now you will need earmarking of the corpus investment. You now need to earmark that. The explanation 4 is inserted that if you spend anything from the corpus, that is not to be treated as an application of income, but it would be treated as an application of income in the year in which the amount invested or is deposited in the mode specified in section 11(5), specifically maintained for corpus, to the extent that it was invested or deposited. So if you spend something from the corpus investments, and in that year it will not be treated as an application of income, but in the year in which you reinvest that back into corpus investments, then in that year it will be regarded as an application of income. You have similar amendments in 1023C. You have this expression 2, third proviso. So therefore, now you have to keep a track of the movement in the corpus investment. I think the starting point would be the balance of the corpus fund and corpus investment as of 31st March 2021. So reduction of investments, you will have to reduce that from the application of income of that year. If there's an addition to corpus investments over and above the corpus donations received for the year, you've got to add that to the application of income for the year. There is no such time limit for recoupment of corpus investments. That if today you spend from corpus investments, even after 10 years, you can say that, okay, I've reinvested that now back, and therefore I should be eligible for the treatment as application of income. Just to give you an example, illustration, if the corpus donation of 10 lakhs was received in June 21 and is invested for a 1-year bank fixed deposit in July 21, fixed deposit encashed in July 22 and used for acquiring an asset, which is asset, as you know, is normally regarded as an application of income. Corpus donations of 15 lakhs have been received and invested in bank fixed deposit during financial year 22-23. And donations of 5 lakh, corpus donations of 5 lakhs have been received in financial year 23-24. And additional bank fixed deposits of rupees 11 lakhs have been invested in the same year. Total investments over and above the existing investments. So in assessment year 22-23, what happens? The corpus, because the corpus donation which you received in 10 lakhs is invested for 1-year bank fixed deposit in July 21. So therefore, it will be exempt under section 11D. Coming to assessment year 23-24, what happens is that fixed deposit has matured and you have encashed it. So therefore, that amount of 10 lakhs which you have encashed, you have got to reduce it from the expenditure that you have incurred during the year while you're computing income, application of income for charitable or religious purpose. So in your expenditure of our application of income for charitable purposes, you will normally take the revenue expenditure plus the capital expenditure. The total of that, from that you reduce this 10 lakh rupees because this is out of corpus investments. Now the corpus donation of 15 lakhs received during that year, that has been invested in fixed deposit during the same year, and therefore that will be eligible for exemption under financial year 22-23. And in the next year, you have received corpus donations of 5 lakhs, but you have invested 11 lakhs. So 6 lakhs is over and above the corpus donation received during the year. So 5 lakhs will be exempt because you have invested it in during the year. And 6 lakhs is a recoupment of the corpus investments, and that will be treated as an application of income in the financial year 23-24, that is assessment year 24-25. So that's the way it would work. Similarly, for loans, they say that, as today the position is that repayment of a loan is to be regarded as an application of income. They're saying that now they're saying that, okay, if that is so, then we will not allow you the expenditure which you have incurred from that loan which is taken. So from the expenditure taken, incurred, you reduce the amount of the loan which you have taken during the year, and that loan will be regarded as an application of income. When you repay the loan in that year, we will allow you the repayment as an application of income. So similarly, there again, 1023C also there's similar amendment which is there. And Then the question of deficit. In a charitable trust, the deficit is not carried forward under Section 72 or any other thing under that chapter. The courts had been taken a view that you had various high courts, including the Bombay High Court and Indian Institute of Banking and Finance, and Institute of Banking and Finance, and you had the Maharana Mewar Charitable Trust, and various high courts had taken that view. There was a Rajasthan High Court, and then you also had the Supreme Court taking that view in Subro's Educational Society, that they said that this is exempt, so that is so the excess expenditure you can set it off against the income of the subsequent year while you're claiming exemption. So you could, but if you look at the tax return format for assessment year 2021, they really asked you for the sources, and whatever was out of borrowed funds or out of income of earlier years up to 15% accumulation, or out of 11-2 accumulation, option under the spend in subsequent year, they were reducing that. You are allowed only to the extent it is met from income from property or income earned during the previous year. If you look at that format which you are given. So therefore, the question then was that would this carry forward deficit now depend on source? And they've now inserted explanation 5 from assessment year 22-23, which says that there will be no set off or deduction for the deficit of the early years. So therefore, this ratio of the Supreme Court decision has now been reversed. So a few issues which arise, and we'll quickly run through that. This is the last slide. Within what period the investment of corpus is required to be made, immediately or by year end? I think it's good enough if you make it by year end. Just like for capital gains, when you have to reinvest, the courts have held that it has to be by year end. As on the balance sheet date, you look at it, if it appears that you invested, that's good enough. Would deposit in the current account with the bank qualify? I think yes, it should, because that is also under 11(5) it's covered, because it's a deposit with the scheduled bank. There is a Madras High Court decision to that effect. As I said, earmarking is required now in books of accounts. For how long do you maintain the corporate investment? If you've got to maintain it indefinitely. If you don't maintain it, obviously, and you withdraw from that, it will be reduced from your application of income, obviously. What if the corpus donation is deposited in the bank account and spent in the same year? Whether it's a double hit. I think it's not, because what will happen is, because since the corpus donation is not invested, so it becomes chargeable, it's not exempt. If it's spent in the same year, that application is not, if out of corpus donation, will it apply saying that no, you will not get the application of income also? No, I don't think so, because then it would not be a corpus donation covered by 11(1)(d), and therefore the application of income will be you will be able to get, though the corpus donation will not be exempt. Corpus donation will be income, but so far as the now, of course, that argument that corpus donation is a capital receipt is still something which is open to you, but subject to litigation, of course. But the point about if the corpus donation is, you treat it as taxable, and you can still claim the application of income. So at least one deduction you will get over there. That's the problem really is when you receive a trust receive immobile property other than assets other than immobile property by way of donation, corpus donation. Say for instance, a trust running for medical purposes receives an ambulance as a donation. Now that is not a mode of investment specified under Section 11(5). Can one claim, say that this is really okay? It's not a corpus donation, but then I have used it for the ambulance, and therefore the ambulance would be treated as an application of income for charity purpose. I think that should be possible to be argued. Similarly, for a trust, a temple trust may receive jewelry now, which is for the adornment of the deity. Now that may be regarded as the application of income, though the receipt may not be regarded as exempt by way of corpus. Now, if corpus fund is invested in immobile property, as you go and provide depreciation on that immobile property, there could be a mismatch of the fund and investment balances over a period of time. And therefore, ideally, what you should do is, either you create a depreciation fund instead of reducing it from the cost of the asset, or you reflect the assets at gross block, less accumulated depreciation up to the end of the previous year plus depreciation for the year, just like you show in a company. That's one other way of doing. So you're able to match that. Yes, this corpus building fund matches with the amount of building, etc. And therefore, it's not something which has gone just by way of depreciation. The officer does not take a view that you have utilized for application. Where existing corpus has already been utilized in earlier years, investments are not matching. So whether recoupment of corpus can be claimed, I think it's really difficult to claim that, that situation. Because there in that situation, you've already got exemption for the corpus donation, and then a recoupment of corpus is otherwise, would not be. So I think they probably, this is something which is not intended, and what if the deficit over the earlier years was financed by the loan and now the loan is repaid? Now there, the question is, you would have got a deficit, in the earlier years. That deficit is not allowed to you as a carry forward. Now you're repaying the loan. That when you repay it, you will get it as an appreciation of income. You will not get the carry forward of the deficit, but the repayment of the loan should now be eligible. Maybe on the similar logic, the recoupment of corpus also should be allowed. But of course, in that situation, maybe there also one could say that if that had resulted in a deficit because I spent it out of corpus in those years, so therefore that had resulted in deficit. That deficit has lapsed today because of the amendment, and therefore now when I'm recouping the corpus, I should be eligible for the benefit of treating it as an application of income. I think. Yeah, that covers this, and I think we have some time for question answers. Well, I'm happy to take them. Thank you. Well, I'd just like to apologize for the inconvenience caused because of the internet connectivity.
Thank you, Gautam bhai. It was a very enlightening speech. And I request Jigar to compile the question and ask to the Jigar. One moment, sir.
Sure.
Okay.
Can I start with question answers?
Yes, please.
Yeah, sure.
Yes,
Sure.
Jigar.
Okay.
Yes.
Yeah, sure. Thank you. The first question: if no registration number is available for public charitable trust under section 12AA, can apply registration under section 12AB?
I think technically, yes, you should be eligible to apply, and you should put I think a dummy number. For instance, if they're asking for the number, you should put a dummy number, I think, and you're anyway enclosing a copy of the registration certificate. You have to enclose, because otherwise you can't say, no, I'm registered, but I don't have the certificate at all. Then you have a problem.
Okay, thank you. What is the upper ceiling for accepting donation by trust in cash, both from single donor and from multiple donor? I think you answered this in live, right? That 2000 was there.
Yeah, 2000.
Yeah. The prescribed one page form requires all the documents to be attached, whether it is conformity with the amendment.
See, that is the part of the procedure. No? So when you're making an application, it's a part of the rules. So therefore, it's a procedural requirement, and I think so. Yes, that's something which would be a valid.
Okay.
Because the Act merely says that the procedure will be prescribed. In such procedure manner is being prescribed.
Okay. Next is, what is the nature of other income? Please elaborate.
Other income could be interest income. It could be any other income which the trust is earning. I mean, other than those grants and the thing. So they've asked for those three categories. CSR donations, specific grants, and grants from central state government. So other donations, for instance, also could fall under that. Or interest could fall under that. Any other categories of income would fall under that.
Next is, it is practically difficult to provide financial details as on date of application due to many reasons. Example, bill comes off accounts department after a few days, though it is received by other department, etc. So can we give such detail as on 31/3/21 and mention somewhere in the application?
See, it's an online application, so I don't know whether there's a place for remarks over there, or I don't think there is a place for remarks. Frankly speaking, against that. But these financial details which are required as on the date of application is only if you have not filed an income tax return for assessment year 2021. It's only in that situation that up to before 31st March, if you have not filed, it's only then that you're required to give those financial details. Otherwise, you're not required to give those financial details.
Okay. if we have applied for registration on 26/4/21, then the audit for the year ended 31/3/21 should be completed before that date.
No, as I said, you can file unaudited accounts, so certified by a trustee, that's good enough.
What if a very old trust has lost its 12A certificate but knows its registration number?
Uh, this is a really challenging issue. Frankly speaking, such trust should have got that. In fact, I'll tell you another interesting story. We've got a trust which had got a registration issued by the department, where the status of the trust was shown as firm F. The alphabet F was there. Now, we've been trying to get that cancelled. They get a new number and get that cancelled. So we got a new number, but cancellation of that old number is becoming a problem, and they've been losing. The problem really is that they are facing is that their 12A registration is linked to that old PAN. Now, unless the 12A registration is linked to the new PAN, it's going to be a problem. So that's where I think we made an application to CBDT in that case, that saying that to DG systems and better CBDT, saying CBDT member system saying that this is the problem, please do something. And fortunately, it's a government promoted trust, so therefore, at ministry level, hopefully they'll talk to each other and get it done. But these are practical difficulties, and where one will have to take it up with the commissioner exemptions or say that these are the difficulties which are being faced. What do I do?
We have similar case because we have the in the form 7 we are just mentioning number every year trust, but we do the trust doesn't have that 12 is practical certificate for that.
So this is a practical difficulty. You should try and say, so.
Actually,
So
before
in
this
fact,
COVID
let me
time,
tell
we had
you.
applied it.
No, let me tell you that we had a similar situation where one of our trusts went applied it way back in 63 or 1963, and they didn't have that 12-year certificate. And then I remember around 8-10 years back, we had gone there, and one of our article clerks had sat down with the clerk over there, opened that physical register, and went through it, and ultimately traced. Starting right from 63 to 65, we had gone through all the applications and found, okay, so this is the number. Then they issued a duplicate certificate. But
We wrote the letter to the department before this COVID time last year, but now no
no, but once
response.
things are better, maybe somebody should go there and sit down, and they have that register, bound register is there, which has we know approximate when they had applied for registration, and you have that date of registration. From that register, you'll be able to find out because it's date wise. At least whatever was given by the CIT.
Next question is reiterating the question asked by someone: what is the upper limit for the trust accept donation in cash? Rupees 2,000 is the limit for the donor to get deduction. What is the amount of donation trust can accept in cash?
See, there is no there is no prohibition on the trust accepting cash, but it will need to have the name and address of the donor, and now the PAN of the donor also. Because if it does not have that, then it's in trouble, because then that may be treated as an anonymous donation.
Next question is, if the trust doesn't have original formation document, including trust deed, how will it affect the registration under new regime? Where there are the trusts which are formed and are operating prior to 1990, where all manual docs were supposed to be maintained. Such trust might have this issue.
See, let me tell you, I've got trusts which are set up in 1896 and, so in the 19th century. And such trusts also, what we have done is, of course, sometimes what has happened is the trust has moved for an amendment of its objects and all that, or it's framed a scheme with the charity commissioner. So that would be the latest position. So that's the one document which you will give in that situation. But, you know, in case you're registered with the charity commissioner would have a copy of your trust deed or whatever documents under which you are registered. So you can go to the charity commissioner and get a copy of that, certified copy from the charity commissioner. That's one option which is there.
Okay. Then again, the repeated question: 2,000 limit is for donor. What is the limit for trust for accepting a donation in cash? So I think you answered this. And last one is, yes, we'll be sharing. Someone has to share the PPT.
Yeah,
We'll
I'll
be
share the PPT.
Yeah,
I'll
we'll
share
be
that.
sharing the
Just after
PPT.
that, immediately after this, I'll share that.
Once Dilip bhai receives it, it will be sent to all the members via mail. So that's it. Questions are done from my side. Thank you, sir.
Just to
Thank you.
interrupt, our next webinar is on 6th April, 6th May 2021. It is about faceless assessment. We'll send you the email and all the details in a due course. Okay, Manish, please.
Manish, you're on mute. Manish, hello, Manish. Manish, bhai, you're on mute.
Good evening, everybody. I, on behalf of Churchgate CP Study Circle, welcome all of you. First of all, I am very thankful to you for selecting us as deputy conveyor and deputy conveyor, and shouldering more responsibility on us by showing confidence on us. We hope that we will be able to fulfill the fulfill the expectation of all the members of Churchgate CP Circle, CP Study Circle, and we'll try to improve on seminars by arranging seminar on different topics, which will really helpful to the members in day-to-day practice in different areas. Uh, with this, I welcome CA Gautam Nayak sir, who is veteran in this field, and in very lucid manner and very simple manner, he explained re-registration procedure as per new provisions of Income Tax Act. I'm sure that it has cleared all the doubts of the members. And with this, I propose a very hearty vote of thanks on behalf of Churchgate CP Study Circle. Thank you. Over to you, Dilip bhai.
Thank you. It was a pleasure.
Thank you very much. Okay, this meeting is concluded.
Thank you, Gautam bhai.
Thank you, sir.
Thank you, Gautam.